All right, guys, what is going on? What is good? What is Gucci gang? Excuse me. Are you guys ready to learn something today? Drop a 1 in the chat if you guys are ready to learn something today. I have nothing planned, so we'll figure it out. I have no plans, but we'll figure it out. We'll probably do a brief overview of what we talked about yesterday. And we'll probably talk about market maker models a little bit. I'll probably talk a little bit of, you know what I'm saying? Might talk a little bit of trash. I don't know. We'll see what happens. Dude, I went to the store the other day. I think I told you that. And they were out of orange juice. But I went back this morning. Ooh, they had some. So I got some 1836 fresh in a glass orange juice. Man, I'm excited. And then the lady at the counter was like, oh, you get $3 back if you bring back the glass. She's like, you got $6 of, I have 2 bottles. She's like, you got $6 right here. I'm like, sheesh. So it's almost like buy 3, get 1 free kind of thing. So I'm excited for that. So that's what we're starting off with today. Orange juice, baby. That's what we're starting off with. Listen, also too, dude, man, it is so beautiful outside. I had the windows down. Man, dude, I really wanted to just drive around all day. I should have said, screw the YouTube stream. I'll let them do what they want. And I should have just kept driving around, man. Oh, man, so immaculate weather, I'm telling you. But because I care about you guys, I won't miss the stream on purpose, okay? But anyway, what is good? Torty, Eminem, Yuso, Eric, Jorks, Julius, Ebernith, 2020, Roger, Scott, Darth, Quinn, Jordan, Les Savage. Who else? Who else did I miss? H, what's good? What is good? So as per usual, I meant to hide the markups. I didn't want to show them right off the bat, but it's okay. So at 10:16, I said NQ. This is in the Discord, by the way. 10:16 Central, so about 2 hours ago. A little less than 2 hours ago. I said NQ left behind some clean highs, wondering if this is becoming a market maker buy model. Now, what does that mean? What does that mean? What do you think that means? What is the first half of a buy model? Think about it. What is the first half of a buy model? While I struggle to find the image I'm looking for. What is the first half of that? If price obviously moves left to right. So if we start over here and go left to right, if the manipulation on the downside is the halfway point, what I'm talking about is the first half. So what is the first half? Sell side price delivery. Distribution, yes. Lower prices, yes. Sell program, yes. It's all the same thing. Distribution lower. The algorithm's going to take price and push it lower, which we're going to see lower pricing, right? But we classify that as a sell program because that's what it is. So sorry, I didn't clean off my desk. So what is the first stage of a buy model? It's going to be consolidation. It's going to create a consolidation. It's going to leave either equal highs or low resistant highs. Then what should we get? A retracement lower. Ideally, like, leave the consolidation back into it and then leave it. Ideally that. Remember, this is just a drawing. This is just a roadmap. Okay, you have to add the specifics on here. But we would get what? Distribution. And then we would get redistribution to go lower into a higher time frame concept, right? So think about that. You already have the stages, right? Okay. You already have the stages. So if we have our consolidation, if we have our low resistant highs, then what's after that? Distribution. There's an imbalance right there. Lower. After that, what should we see? If we're still in a sell program, we are going to be in a sell program until a low is taken. At a minimum. Where's the next available low? On a 1 minute, it's like right here, but in a more I guess obvious, distinctive sense, and in a more time-based sense, because I always tell you the algorithm references price as it relates to time. And how do you know what that is? We have equities open. We have the lowest low and the highest high in the first 30 minutes. So the highest high is up here. No worries. The lowest low is down here at 8:30. Or 8:30 open to trade lower to go higher. So we have equities open, liquidity. That's the next low. You see how that works? Now, drop some 2s in the chat if you guys are with me so far. If you're not with me so far, say something. I'm here. You literally, you can type in the chat. It's open, Alberto, right? Chat's open today. If you have a question, ask it, right? Anthony, congrats on your baptism, brother. Love to see that. Love to see that. I'm glad you're here. Allie, appreciate that. Roger, okay. But seriously, if you guys have a question, ask it. I don't just move on, right? It's better to ask and to seem stupid than to actually be stupid moving forward. That's not what you want to do. You want to ask questions. So we will be in distribution until we take a previous low. That's, nobody taught me that, but this is the way that I see it. You can't have a buy model without manipulation. So we cannot have manipulation until a low is taken. It's just a byproduct of the way that it works. You see what I'm saying? So we will not have manipulation until we take a low or like a distinctive low I said at a minimum. We can go beyond that. I actually think we're going to get into the 600s here in a minute. I mean, we're in the 600s now, but I meant like 25,600. I think we could get there. We may not, but I think we could. But the point is, if you're in a sell model, because remember, or excuse me, buy model, but in the sell program. Okay, if you're in the sell program of a buy model, we're going to see lower pricing. And again, that was at 10.16. I'm just going to put a little dot where that was. 10.15 is here, so 10 it would be after that somewhere. I'll just put it right there. Okay, so basically here, as a timestamp at 10:15, 1 minute after that, I said, wondering if this is becoming a market maker buy model. So what happens? We trade higher. Kind of a large inversion here, you could say. Right? And then what's that? Zoom in. What's that right here? Up candle. Traded through at 10:45. And then guess what? 10:50. Uh-oh. Uh-oh. 1050. What is that? 1050, man. We love that stuff. We love that stuff, John. Oh, yeah. Can't get enough of that. We cannot get enough of time, price, and context, baby. 1050 starts the 11 a.m. macro. Ooh. We trade up and just into. Look at that. Look at the precision on that. Up and into at the 1055 candle. Not this up candle, but the next one, right? Taps right into that. Right there. See that? And then what does it do? Right down, and then 11:15. So a little outside the macro. That's fine. It sinks below the equities open low. You see how that works, chat? Like, man, dude, I'm telling you, the visibility you will get when you understand this is insane. Like, bro, how long have you guys been in the Discord? And you see me talk about stuff before it happens, right? Like, does that not excite you? I know some of you are probably used to it by now. It doesn't excite you anymore. But for the new people, at least, it's like, hey, man, this guy keeps pointing out levels and they keep going there. This is insane. And I want you to have that too. And this is the type of visibility that you get when you understand time, price, and context. Now, market maker models are more of a framework. There's stages, right? There's aspects to it. But you won't understand the framework, or at least the precision elements of the framework, without understanding like the time and price and context aspects of it. So in other words, Julius, in layman's terms, to keep it simple, yes, I think we will be in distribution until a low is taken. Now, what I do not do, okay, hear me clearly on this. What I do not do is I do not try to pick the low of the day in advance. Okay, sometimes, or maybe I might get the exit at the low of day or high of day. You've seen me do that this year multiple times, perfectly, by the way, if I can toss it in there. I'm not, like, when we're going lower here, I don't know if equity's open, if it's just going to sweep that and go higher, or if it wants to go for London's low, or if it just wants to go further into that higher time frame gap. I don't always know. But what I do know is trading distribution down to a low, that's good enough. That's good enough for a trade. It's good enough to grow an account. It's good enough to pass a combine. You see what I'm saying? I don't think you need this entire move here, but something like that up candle to that right here in like not even 20 minutes, that's a good trade. I'm not trying to say, oh yeah, well, you know, hold beyond that one, hold for a deeper concept. I don't try to do that. Okay. Now, sure, there have been times where I'll leave a runner, or if there's a higher time frame imbalance, I'll aim for that. Sure. But in a case like today, I don't know what the low of day is going to be, and I'm not trying to pick that. And if I'm short, I'd rather just get out below a low, whichever one's a little bit more obvious. Personally, I think the equities open is solid versus London's low. But that's just me. Okay? You will get punished if you hold trades too long. So, with that being said, we met that, not a reversal. And like I told you a few minutes ago, I think we're going to continue. And I think I talked about 600 and below. And this is a heavy market. And we're getting closer and closer to that. So, was a good one. Aren't you going to count the imbalance prior to the 9 a.m. equities? Which one? Yeah. Are you talking about this one up here that became an inversion? I did talk about that. I don't think I understand what your question is here. Oh, you know what, Wolf? That's a good point. That is a good point. I'm glad you brought that up. NQ, right, is the weakest index today too, which would further amplify downside. Remember the law of, I don't remember the name of it, but I think it's the law of strength or the law of weakness, something like that. Right, that'd be in alignment here too. Why do you think they're called laws? They're not, I mean, I guess some of them are theories, but a law never changes. A law means it is what it is, and it'll never be different. And that's one of the laws. So yes, I'm glad you brought that up. Okay, thank you, Hellspawn. So yeah. With that being said, let's come back to what I was saying earlier. You have to know what the stages are, okay? Meaning this right here. When you know the stages, and they're always in order, that's why entry models are always in order. Manipulation will always set the low risk buy will always be after that. The first stage accumulation will always be after that. The second leg and the second stage of accumulation will be right after that. And then terminus, that run to liquidity, will be last. Okay? That's how it works. This will always print in order. It will always do this in order. Okay? Now, I'm emphasizing this point to get you to understand that. Because when you see it this way, and you start seeing it in price over and over again, that's how you get you gain that experience with seeing it. I'm not saying like trading it every time you see it, but seeing it over and over again, it becomes more reliable, which is exactly what you saw on Friday. Before we, or maybe it was right after we made the low. Remember that? I said, watch that distribution potentially become accumulation. And we saw that, and it ran for the highs, right? That's foresight. That's predicting. That's not reacting. That's predicting. Okay? Not reacting, predicting. Predicting. That's beforehand. Okay? And you can do the same. I promise. If you really study this stuff, I really believe that you can learn how to do this. And it's always the same. So, when you're watching price, whatever time frame it is, and you're watching it and you go, okay, we just made equal highs, but then we ran away from that. Well, we should just buy it for a run up to the equal highs. No, that's not how it works. Now, you will see instances of that where it might have equal highs and then have a retracement and then just blast higher. Okay, you don't do anything with that. You just leave it alone. You don't trade that. Okay? Because there's probably something on a different time frame that you're missing there. But when you see we've got equal highs and then we left it all of a sudden, and we have like equities open low or London's low or some sort of other lows or what have you. And again, like I said, having higher time frame concepts on here, the same way that you see that I have some levels on here, and I'll show you those in a minute too. But you have to understand, okay, we left that and we left this behind. So we may not want to long that, right? This isn't going to become some sort of mitigation or reaccumulation. That's not going to do that. I mean, it could, but looking at this market, that's not, it's an experience thing, but you just know, like, okay, you'll see where you used to get tripped up. Like, oh yeah, this is going to be a reaccumulation to go for those highs. And then it just doesn't do that. And you'll learn from your mistakes, hopefully, through journaling. But that's not going to run those highs. It's not going to run those highs until it runs a low or like an important low. So guess what? If we left consolidation, if we're seeing signatures of distribution, and it's the heaviest market today, prime shorts need not have equal lows, need not have low resistant lows. A session low is good enough, and equities open liquidity is good enough too. And you've got both here. Equities open, London. Okay? So you know the stages in order: accumulation, or not accumulation, sorry, original consolidation with the highs as a target. But you know, when you start seeing concepts that are bearish being respected, you know you're in a weak market. You know you shouldn't be longing. Okay? You're going to touch a hot stove. Okay? How many times you have to touch a hot stove before you realize that that's not the way to do it? Right? Like the pizza rolls. Have y'all done that? Drop some threes in the chat if you've ever made pizza rolls and as soon as they came out the oven, you bit one, you burnt your mouth, and now you can't taste the rest of them. That ever happened to you? Maybe that's just me, but listen, at a certain point, you do that a couple times in a row and you're going to start telling yourself, all right, maybe I should give it like 5 to 10 minutes before starting to eat these. You know what I mean? You start learning from your mistakes and you start going, okay, clearly I'm trying to force setups that aren't there because I went on TikTok and found an entry technique that everybody says they made all this money with, but I'm getting my ass kicked with it. I don't get it. There's a lot more to trading than just entry models. I teach entry models. I love the entry models, but the entry models are useless without time and price and context. Without the right framework, you're not going to know how the models work. Your imbalances are not going to work. Your inversions are not going to work. Oh, look at that. There's your 617. We just nailed that. You see that? The heaviness continues. Well, how did he know that? How did he know that? Oh, it's a heavy market. It's obvious, but I guess now we'll transition over into the higher time frame. Okay, watch this. This has been on your chart for a while. Friday, October 24th to Monday, open of October 27th. Can we all agree that that's been on your chart? Not mine. It has been on mine, but it's been on your chart too. So any weekend analysis, you should know, hey, you know what? There's a gap. There's a gap there. There's a gap there. Now watch this. I've told you time and time again for many years, for a very, very long time, I told you every concept, not some of them, not most of them, not just all concepts can be inverted and all concepts have a premium and discount. So guess what? You can draw quadrants from Friday's close up to that Sunday, Monday open. And then guess what? That's where the levels come from. Your upper quadrant is 670. Your midpoint is 617. And your lower quadrants, 5. I don't think we're going to get there. If we do, we're stupidly bearish. But 560s. And then, of course, the close is around 510. So you see how that works? You know, maybe, matter of fact, what we can do is just change this to like a black. So we understand it's a little bit more distinctive and it's higher time frame. So watch this. When we go down to the smaller time frame, now you can kind of see what that looks like. You see that? Look at that. Tell me, chat, tell me that price is not delivered by an algorithm, dog. Look at that. Look at the percent. We talked about this earlier. This is looking like a buy model. The first half of a buy model is a sell program, which means we're in a sell program. Boom. Right to liquidity, no reversal, the continuation down to the midpoint. Oh, just look at it. Like for real. I know I've been saying this a lot lately. But this is the things I don't know what people study, but I do feel like people don't look at this stuff the way that I do. And this is why I teach the things that I teach. And I want to pause here and say, like, bro, look at it. You know what I mean? He said price isn't delivered by an algorithm, it's delivered by John Fibonacci. Yeah, that's insane. That is insane. That's almost as good as that comment the other day. I forgot who it was. He was like, you're a gift from God. Like, whoa, that's a Bro set the standard for comments now. It's crazy. I love that. But anyway, you have to know what stage you're in, which is exactly what you saw on Friday. It's exactly what you saw. What did we do yesterday? Do we even know? Yeah. You know what? This wasn't really a buy model, in all fairness. So I ain't gonna say you saw it yesterday, but you've been seeing it over and over again. If it's a sell program, or if it's a sell model, right? The first half is a buy program. If it's a buy program, the first half, or excuse me, Jesus. If it's a buy model, the first half will be a sell program. Okay, I don't have notes in front of me, chat. This is literally off the top of my head and from what I know. Okay, but are you getting it? Drop some threes if you get, or no, we did 3 already. Drop some 4s if you guys are getting it. The stages are in order. That's how you trust. Let's say an imbalance. Oh, you have 2 imbalances. You take the first one, stop at the second one. How many times have I said that before? Where do you think that comes from? Oh, now I'm starting to see it, John. I'm starting to see all the pieces put together. Yeah, you're welcome. Right? Imbalance. After that, okay, well, do we get any shift in the state of delivery? Do we have any order blocks? Do we have any up candles? Not really. We don't have any of that. But guess what? We do have one here. Well, what about the mitigation? I love the mitigation model. Well, guess what? If it doesn't print a mitigation model, then there's no model to take, bro. That's why having one model is stupid. I only take one model. Okay, well, you're going to miss a lot of trades. You're going to miss a lot of profit. So have fun with that. Have fun missing out. If there's no mitigation model that you can see, it ain't there. You have an imbalance model here. It's an imbalance that prints in the direction of opposing liquidity. Okay. And then right there, whatever you call this, you can call it an order block model, you call it an institutional candle model, you can call it whatever. You can call it the Saratoga model. I don't care. None of the names matter. Okay. You should rank your top 10 models for a video. In fairness, I don't really have like a favorite model. You've seen me trade like pretty much all of them. You've seen me snipe with them. You know what I mean? You've seen me catch lows. You've seen me catch the low risk buy. You've seen me do add-ons. I don't do that often, but you've seen that at least. You know what I mean? That's all it is. Pyramiding is just utilizing multiple models. You realize that? It would have been no different here. It would have been no different if you shorted the imbalance and then shorted that up candle for those lows. Short 1 or short 2, add 1, or short 1, add 1 to go lower. It's no different. That's what pyramiding is utilizing multiple models. And that's why I keep saying one model is stupid. You'll never add to positions, which means you'll never see exponential growth. That's stupid. You're not going to take, additional trades or different trades because your model doesn't present. You're just going to miss out on the rest of the move. That's stupid. That's stupid. And there's a little bit of ego in that too. You know why? Because I used to do the same thing. Man, I'm not going to take that up candle because I couldn't take the imbalance. Oh, that's too late for me. Yeah, you're an idiot. As if I'm talking to myself here. You're an idiot. If I was talking to myself from 5 years ago, I would slap myself. I'd be like, what are you doing? You could have made all this money. You could have done so much more. But you're an idiot because you let your ego get in the way. Zoe. That reminds me of Gorilla Zoe for some reason. The stop loss on what? On which short are we talking about here? Are we talking about the imbalance? Are we talking about the up candle here? Are we talking about this inversion here? Like what, when it comes to the entry, what entry, like risk reward, are you trying to look at here? The up candle. Okay. Well, you've got a couple options here. As I usually tell you guys, you have a few different options. And I will say, the larger your stop, the worse your RR is going to be. But look, you asked, so I'm going to tell you, okay? If you believe that this up candle is going to send price lower, then the stop can go to the high of that candle. It can go to that high, which is just a tad bit higher. If you really want a tight stop, and you can't complain to me if this happens, but the stop can also go to the body. Because if that is going to be respected, it won't go to the body. That is a super tight stop loss. And I give you guys multiple options, so that way you guys can never tell me, well, John told me to use a super tight top loss or stop loss, and now I keep getting knocked out before the move. No. You can, or you can go with that high. I think the furthest I would go is the high from this imbalance or the high end of that imbalance. That's the furthest I'd go. Like if I was going to short that, you could go to that high, or maybe that high right there, because that low there is just under a 1 to 2. Which means if I was going to do that, then we may have to go for London's low as a target instead to try and get that good RR. And 1 to 2.2 is fine. It's like a 1 to 2 and then a little bit more for commission and whatever else. So yeah, there's options. You have the high of the body, you have the high of that candle, or you have the high of this imbalance here. Okay? So you're welcome. I wouldn't consider this a low risk short. Based off of the sell model, because I told you I think this is becoming a buy model, but it almost acts like one, because that's the high, that's the low risk short, and this is like the distribution. So it really shouldn't come back to that. Definitely shouldn't go back up there, but it shouldn't come back to that. It should leave that. So that's what I think. What's good, Flacco? So let's see. We talked about market maker models, or at least a buy model. We really haven't gone over a sell model, but the sell model is just the inverse of this. Okay? It's still going to be in order the same way. Consolidation, equal highs or low resistant highs, and then distribution, redistribution. Sometimes you only get one level of distribution. We saw that last week. I don't always make the rules, okay? Or sometimes it may be distorted in a way where you can't tell. If it's too muddy, if you can't see it, don't force it, okay? It needs to be clear. If it's not clear, it's probably not it, okay? You hear me talk about that. Oh, I can't tell, or I don't have a bias, or we're stuck between two different higher time frame concepts like gold, so I don't know. You know what I mean? But there's that. So distribution, redistribution, then your manipulation, right? The sweep on liquidity and or a higher time frame concept. This is where you'll see the inversion model, mitigation model, shift in a state of delivery, stuff like that. And then the second leg of accumulation to go higher. But it's always in order. And one of the greatest things too, one of the greatest assists is the law of the return. The law of the return. What was once bearish becomes bullish. What was once bearish becomes bullish. And again, I have to say this. so people don't miss it. It looks like, oh, well, John, yeah, that's just old resistance turn support. It looks like that, but it's not that easy. If it were that easy, then every supply and demand trader would be killing it. Oh yeah, old resistance turn support. Okay, well then the trades that you take based off of that, why do they go to stop loss? Why do they sit around your entry? Why do you not get in and then blast higher? Because you don't time it correctly, and you probably don't get the bias correctly either, because you don't look at liquidity. You see what I'm saying? This idea is based on algorithmic price delivery. And that is what you saw with, what did we talk about? It was that was what you saw on Friday of last week with ES. That's why I was able to do that for you. Okay? So drop some fives if you guys have had a good stream so far. This was utilized to go lower. So that on the other side of the curve. What I mean by that is once the low is set, this is your sell program, this is your buy program. So once that manipulation is in, once the low risk buy is in, after that, okay, cool. You know ahead of time, well, manipulation sets the low risk buy is here. So that means after that, we should get first stage and then second stage. It's in order. It's a book that's already been written. Literally. It's a book that's already been written. Or it's like a movie that you've already watched. That movie that you have on like a DVD or something, it ain't going to change. It's still going to have the beginning, the middle, and the end. You already know how it ends. It's the same thing here. You already know it's going to end at the equal highs, or maybe equities open. But you already know that's going to be terminus. You know that in advance. So you know, hey, this was distribution and it should become accumulation. You know that ahead of time because you watched it form beforehand. Spooky stuff. I know it's not October anymore, but just look at it. Right? When you align time, price, and context, that's what you get. Precision. Precision. I saw those programs so many times on gold. Yeah, gold is gold's a different animal, and you really got to be careful. You got to be careful with gold. Okay, gold is not to be messed around with. Now, I have had some really stellar trades on gold. Okay, but look at what I told you earlier in our chat. Earlier in our Discord, what did I post about gold? It was at 10:18. I said we're stuck between higher time frame concepts. Could be relatively strong versus the dollar going higher, but overall I would avoid today. And I showed you the daily time frame. And then I also pointed out like a minute, or that same minute actually, that we had some highs up here, right? But look what happened. We did not run higher. We had traded back into I think that's a higher time frame imbalance with that gap included. So earlier today we were in here. I can't even see what price that is. 39. We were at 39.81, which is here, right? So if you look at the daily time frame, price has respected that imbalance from back here, and it has respected this upper imbalance here as well multiple times. So when price is in between those two, I don't know. It honestly, to me, becomes 50-50. I don't know. I would only go with bullish because, again, the dollar, and then having like those highs here, like, okay, I'd go with that. But then look what happened. We didn't go for the highs. I would have got that wrong. And that's my point. Didn't we discuss this yesterday? It's not always about winning more, but sometimes it's about losing less. Right. I avoided an easy loss by simply not trading this when it is in between two higher time frame concepts. And to be fair, right where I was posting that was also in the middle of that range from those highs down to the low. It was right near here. So we're in between higher time frame concepts that both have been respected. And then we're also in the middle of the current range that was established. That's why to me it's 50-50. So I would avoid it. And I did. And I'm glad I did, because I would have lost. You see what I'm saying? Like, bro. I sincerely hope you guys write this stuff down. Honestly. I really hope you write this stuff down. Because for a lot, there's 60 people on here. For a lot of you, this might be new. Houston in the house, nice. This might be new to you. Oh, I've never heard that before. When price is in between two higher time frame concepts, what do? Nothing. Me personally, I do nothing, because it becomes a little bit more improbable for me. However, when it comes to the indices and we're in a sell program or a buy program, we've got some clear distinction of liquidity and order flow. We're in high probability land, baby. And that's what I want to trade. I want to avoid low probability conditions. I want to trade what I consider the high probability conditions. And that's going to be shorting bearish markets. That's going to be shorting weak markets. Or like yesterday, we covered this a little bit. There's equal highs in here. I want to be longing up to equal highs. You see what I'm saying? But that up move yesterday was very, very short-lived. And overnight was disastrous. Overnight just was like a bag of rocks dropped in the ocean. I mean, we just sank immediately overnight. And today's equities bamboozled some people. I do think the longs here were clean. Like for those highs, you know, taking some short-term lows and tapping into that upper quadrant again here, right? There's some time, price, and context for you. None of you probably looked at it, and that's okay. That's why I'm here. Right there. And then the retracement to go higher, I think that was great. I think anybody that longed in there was beautiful. But then it starts to do this. And then it starts to print low resistant highs. Then it starts to, and then it's like, okay, now we're in a, by now, we are definitely in a buy model, but we are in a sell program at the moment. So we're probably going to trade lower, which means if you're still long, get out. Get out before it comes back to your BE, and then you get mad. Well, I took a trade and TikTok told me to take the trade and walk away, but no, I'm break even. You're right, because you're a dumbass. Listening to TikTok is stupid. Stupid. There's probably some good people on there, but you get my point. This stuff is not that easy as TikTok will leave you or lead you to believe. It's not. Okay? Anyway, let me catch up on the chat really quick because some of you wrote up a lot of stuff. Today's the beginning of a new month, so the market may go down to create the... yeah, so that would be the monthly open, basically. Well, if the monthly PO3 or the monthly AMD, which is a very good point. Thank you for bringing that up. Have a good one, Scott. Emmanuel says, hey, brother, thank you for the content. I'm starting to get better. That's all that I ask, man. That's all that I ask, is that you guys actually get better. If it's not winning more, hopefully it's losing less. Ideally both. But it takes a while to get experience. You can't what is it called? Experience is something that you have to earn on your own, and nobody can rush that. I think you can shorten the learning curve a little bit, but it's going to take 5 years to get 5 years of experience. You can't skip that. You get me? So the best time to start, or the best time to plant a tree was what, 20 years ago, and then the next best time is today or whatever. Same idea. That's why I'm so adamant about repeating topics or repeating these ideas of you should be journaling, you should be reviewing your trades, you should be printing off charts, okay? Because I want you to be able to put the work in to get to a much higher level. I mean, you see Flacco. I don't message Flacco on the side and go, hey, bro, look at this chart and do this. He does all his stuff on his own. I don't tell him nothing. And then he'll post, you know, his stuff. He's taking good trades. And there's a lot of people taking good trades. And y'all do that on your own. You don't need me. You don't need me to point things out. You find stuff on your own, and that's what I want. That is exactly what I want for you guys to do, is become self-sufficient instead of relying on the things that I tell you. Now, I like doing that. I like leading the way because I want you to watch it. Oh, John's talking about being bearish. Okay, well, let me watch it. And then you see up candles being respected. And you see price kind of go higher and then just rip ass lower. You know what I mean? Because I know what that feels like. I know what that feels like as a beginner. You go, man, how does he know? How does he know? He talked about that like an hour ago, and now it's happening. Right. It's not for your jaw to hit the floor. It's for you to watch price, brother or sister. I know there's some ladies in here. Watch price. See what it does. See if it doesn't respect the very things I teach you. Bias, entries, order flow, timing, all that stuff. So you can watch the algorithm print in real time. That's what you should be doing. That's what you did the other day when I told you to watch that reaccumulation. You were watching the algorithm print. You were watching the algorithm say, okay, we traded above this old distribution. Now we're going to trade down into it. Now we're going to blast higher. You literally watched multiple moves in advance. And you're going to tell me, or you're going to let somebody else on the internet tell you that this stuff isn't delivered by an algorithm? That's crazy. That's crazy that price respects parameters that we've been outlining for a long time. It's diabolical, honestly. It's all just random. No, it's not. It's not random at all. So, anyway, I've rambled probably enough today. We're a couple minutes into our 1 p.m. macro, but I really don't have anything else for you. Okay? We'll do a quick review of yesterday's back to the basics, and then we'll shut it down, and I'll put out a market review later this evening. But what were the 4 things we talked about yesterday? Back to the basics. We talked about 4 different things. What were they? And yeah, I'll say this, Flacco. NQ, that's what I was looking at a minute ago while I was rambling to you. We did trade lower and into that higher time frame, 50% for NQ. And ES hasn't done the same. So ES might be stronger here, but there's no target that I like. I told you that yesterday too. If there's not a high probability target, I'm probably not going to go with it. But with NQ having a high probability target, a clean target, I like that more. Even though it is the weaker asset, I like that more. That's just me. I like a target more than I do strength. Most of the time. Okay, Jorks, that's number 1. Right? Price will seek 2 things. Liquidity or inefficiency. All right. Test that. What'd the market do today? We made a higher high, right? Which wasn't really into like anything that I can see, but we ran some previous highs and then made a higher high here, right? So liquidity, that short-term high, I guess there's probably a small pool of liquidity there, but what is it going to seek? Inefficiency. There it is right there. Liquidity here and here. And we drop down. So, yep, that idea still holds. We still trade to liquidity and inefficiency. inefficiency to liquidity. Look at that. Yeah, stop loss and targets. Yeah, okay. So that was one of them, right? The high, low, higher high formation, right? Something like that. That formation by itself is not that great, but with the proper context, it is. And did price ever get back to that high? Did it ever do that? No. It got really close. I won't argue that. But what did it create there? When it sold off, it created an intermediate term high. Oh, we talked about that a little bit yesterday. Intermediate term high. Boom. Now, of course, this is like a low, high, lower, low, and that could be a good stop loss placement. Yeah. In the initial move higher, sure. But that becomes liquidity after a specific amount of time. So now it was a stop loss in the short term, but it's building liquidity here because it's the lowest low in the first 30 minutes. So now that's going to swap to a target. So, yep. Idea is still holding up. What else did we talk about, chat? That was number one, was price will seek two things, liquidity and inefficiency. Number two was the targets and the stop loss placement. Target today, obviously, was equities open and London's low. And that 50% of the higher time frame gap that we watched trade down there. Number three was what? Chat, this was literally yesterday. This was 24 hours ago. There's 60 of you on here and there's not one person that... Where's Ricky at? Ricky was taking notes yesterday. Is he in the chat today? Did anybody else remember what we talked about 24 hours ago? Don't be disappointing me, chat. You guys are better than that. What was number three? Taking less bad trades and more good ones? Well, that was really more so the commentary, but I'll allow it. AMD, Roger, was number four. Accumulation, manipulation, distribution. I would say we do have that pattern here. It's just in a very distorted sense. Yeah, it's kind of distorted, but you could say accumulation, manipulation, distribution. Accumulation, manipulation, distribution. And notice, right, the distribution there. Not bad. Turns out, still holds weight. You guys are all fired, man. Number three was buy low, sell high. When you're working within a range, the upper half is premium, the lower half is discount. You're all fired. Don't ever come to my stream again. This is the AMD as number four. So, stop loss placement, target, AMD. So, you know, that's it. That's all I got for you today. So, master the basics, okay? Build on the basics. The basics are your foundation. They're the concrete floor, all right? Once you have that concrete floor, you build up from there. So your foundation, buy low, sell high. Foundation, understanding high resistance highs, understanding targets, right? When should we short? Ideally above 50%. When should we, what did I say? Buy low, sell high. So if you're shorting high, ideally you want to be above 50% of a range. And you want to cover that short below a low or below an old low. That's buying low, right? First principles, okay? The AMD framework, honestly, it's not nearly as great as like a market maker model personally, but at least going into a day, AMD will help you understand that a lot of the moves that are first are false. Okay? That initial run higher looked great and it looked bullish. But then once we printed a few more candles, the story became different. It became different. We're no longer bullish. It's bearish now. But understanding, hey, we had a big consolidation and ran higher. We saw accumulation and then manipulation. So then what could happen after that? The distribution. Okay? It's simple. It's just three things. Accumulation, manipulation, distribution. All right? And it would be different, or the inverse would be said if it was the opposite. We'd have an accumulation, we'd have a manipulation lower, and then we'd have expansion higher. Accumulation, manipulation, distribution. Something like that. Okay? So the details, I'll say this in closing, the details are going to come after that. So if you know you're in distribution, okay, don't look for longs. If we're going to distribute lower, stop looking for longs because it's going to trade lower and it's going to go to your stop loss. Okay? So that'll be it. All right, that'll be it for today. So the last number, drop some sixes in the chat if you guys got value yesterday and if you got value today. If you find this stuff valuable, drop a 6 into the chat. If you're getting some confidence, if you're getting some knowledge about price action, it's not just indices. Those are my babies. You know what I mean? But this stuff works in currencies. It works in gold. It works everywhere. Okay? If you're getting some confidence, if you like this stuff, drop a 6 into the chat and just let me know. Willow, you're fired. You're fired. Mason, you're fired too. Both of you together are gone. Didn't I ban you guys already? How are you? We got to figure something out. Y'all be good, man. Be blessed. We'll be here same time, same place tomorrow on Wednesday the 5th. Later this evening will be today's market review for members only. So if you're not a member, you can become one. Click the join button down below. It's $25 a month. You can cancel anytime. You get access to cool stuff. And that's the extent of today's marketing. See y'all tomorrow.